CFI, the complete guide to trading, the basic of traditional value investing. In the intelligent investors, Ben Graham processed and explained a method for screening stocks that he developed to assist when the most experienced investors with their stock portfolio selection. In fact, that's one of the major appeals of Graham's value investing approaches, the fact that it is not overly intricate or complicated and can therefore be easily utilized by average investors. Graham's value investing strategy involves some basic concepts that underlie or form the foundation or basis for the strategy. For Graham, a key concept was that of intrinsic value, specifically the intrinsic value of a company or its stock. The essence of value investing is using stock analysis method to determine the stock's genuine value with an eye toward buying stock whose current share price is below the stock's genuine value or growth. Value investors are essentially applying the same logic as careful shoppers in looking to identify stocks that are a good buy, that are selling for a price lower than the real value they represent. Value investors research effort and snaps up what they determine are undervalued stocks with the help belief that the market will eventually correct the share price to a higher level that more accurately represent the stock's true value. Graham's value investing approaches. Graham's approaches to value investing was geared towards developing a simple process for stock screening that the average investors could easily utilize. Overall, he did manage to keep things fairly simple, but on the other hand, classic value investing is a little more involved than just often recite refrain of buy stocks with a price to book P per B ratio of less than 1.0. The PYP ratio guideline for identifying undervalued stocks is in fact only one of a number of criteria which Graham used to help him identify undervalued stocks. There are some argument among value investing aficionados as to whether one is supposed to use a 10 points criteria checklist that Graham Bell created, a longer 17 points checklist, a distillation of either of the criteria list that usually appears in the form of 4 or 5 points checklist, or one of the other of a couple of single criterion stock selection methods that Graham also advocate. In an attempt to avoid as such confusion as possible, we are going to present here the main criteria that Graham himself considered intrinsic value greater in those with an intrinsic value greater than the current market price.